Hey everyone, and welcome to the Defiance weekly live stream where we recap all the major news from the week with our print team. I'm YYC Trader, head of news at the Defiant. I'm joined by our staff reporters, Owen For Now and Jeremy Nation. And there was somewhat of a slow week in terms of market action. There was a lot of news. We had yet another Fed rate hike from the Fed. Um, Congress seems to be making some moves with regards to crypto regulation, with the House Financial Services Committee advancing a bill that could finally provide some clarity to the crypto industry in the United States. Again, it's just the House committees. The bill still has a long way to go, but it's a great first step. And of course, we had the Worldcoin launch. They launched the token, which is trading at quite a lofty valuation in the tens of billions. And this is a controversial project because, for those of you who aren't familiar, they have these orbs, which are pieces of hardware that they use to scan people's retinas, which is supposed to, be a proof of unique persona. So something that can't be faked. And well, that's the idea behind it. But there's obviously a lot of controversy over the privacy angles and, financial motivations behind the project. So we're going to dive into all that and more. Um, but before we get started, a quick thank you to our sponsor. This show is brought to you by Ajna. You can borrow and lend with almost anything in your wallet using Ajna. More about them later. So let's get started with the Fed and the rate hike that took place on Wednesday. Owen, do you want to run us through that?
Yeah, let's take it away. So on Wednesday, we saw a 25 basis point hike, which I think there have been maybe more than 10 rate hikes since the Fed started raising, I think in March 2021. So it seemed like the most muted response I'd seen since the rate hikes happened. It seemed like everyone expected it, and markets didn't blink either way. I mean, I saw people joking about how little the markets reacted and how little new information we got from that hike. And we had Alex Kruger on the stream a couple weeks back, and I messaged a little bit with him, and what he said was that now we're entering a permanent pause period. The Federal Reserve is now adopting a more data-driven approach. So he thinks to see another rate hike, we'll need 2 consecutive strong readings in inflation and labor data. So yes, maybe the end of rate hikes, which is interesting that we're in a wait and see period for the first time. It seems like, if Alex is correct. So that was the big news on there. I mean, big news. It was funny, kind of starting to write a story about that. I was like, man, markets aren't moving. Like, it's kind of hard to figure out a headline. So that's it on markets. And we did see also, I mean, on the same day, we saw the House committees. On that day, we saw the Financial Services Committee move out the major crypto bill out of their committee. And then the following day, the Agriculture Committee did the same. And that was big news, which actually didn't move markets. And maybe that's because it's not the full houses voting on them, but just the committees. But that was certainly big news in terms of crypto's future, because it stands to clarify the SEC's jurisdiction, as well as the CFTC, which regulates commodities. So it'll be interesting to see how that plays out in the House. And I think that will be more people will be watching. It felt like this markup period wasn't totally on people's radars. Maybe everyone's on vacation now, but that was kind of maybe easily the biggest news to come out of the crypto regulation and government adjacent part of the space. So yeah, I guess Sam also wrote a story, and there were other bills in that space, including I think there's like I don't know, there were 4 others. There was the stablecoin payment, or the payment stablecoin bill, which also was passed out of the Financial Services Committee, and then there were a couple smaller ones as well, which all passed. So all have moved out of committee, I believe, at this point. So yeah, exciting to see this move forward. I learned a lot about policy, kind of talking to DeFi Education Fund and a couple other people over the past couple weeks. So that's where we're at with that. We'll have to see. I'm not sure if it's on the schedule when the House will vote on Fit for the 21st Century Act, the big one. But exciting times. It'll be fun to see it debated in the House.
Yeah, I'm pretty sure Congress also goes off on recess, right, during the summer.
Yeah.
And in terms of markets, yeah, this is what you see in every summer, right?
Mm-hmm.
All the big traders on holiday. The markets are basically just moving on their own inertia, like the trend it's been following throughout, like pre-summer is just kind of carried on.
Mm-hmm.
And generally it takes like a real, let's say, I don't want to say black swan, but something really big to actually move the markets in the summer.
Right.
Right. So, and we generally see volatility return like towards the end of August, September. That's when things start to pick up again. So
yeah, you've been saying that while I see.
Yeah,
or, you're saying nothing's going to happen until September, right?
Yeah, we have Jackson Hole, which is like a widely watched symposium of like central bankers and like masters of the universe.
Mm-hmm.
Right, that's towards the end of August. So that's probably going to be the next sort of catalyst for any move, up or down. I mean, in terms of stock markets, everything's kind of at yearly highs. Highest level since March last year. The Nasdaq highest level since Jan. So. The odds favor a pullback rather than continued upside, obviously, but yeah, you never know. So let's move on to a bit of DeFi news.
Yes,
from this week.
In the world of DeFi, we've got the Avalanche, the Layer 1 blockchain, recently unveiled Avalanche Vista. It's an incentive program aimed at boosting asset tokenization on its network. They've allocated $50 million for the initiative, focusing on purchasing tokenized assets across a number of sectors, such as the equity marketplace, credit, real estate, commodities, and also blockchain native assets. The Avalanche Foundation says they see tokenization as a crucial innovation in the blockchain space, and they're committed to making it more accessible, efficient, cost-efficient. Notably, Avalanche is a little bit down. I think in the last 30 days, it might have stabilized around like 3% up, actually. But for the most part, it's been kind of on a prevailing downwards trend for the last 3 months since May. But this new alignment with the rising popularity of real-world assets and DeFi actually goes right along with MakerDAO, who's reported something like 79% of their fee revenue come from real-world assets in 2023. And DeFi Llama actually estimates that real-world assets have a total value of something like $930 million, just shy of $1 billion. Now, Bank of America is predicting that this asset tokenization sector is going to exceed $16 trillion in the next 5 to 15 years. So it's really growing. And if it starts to ramp up, maybe by September, we might see some of this activity driving some of those bullish trends there, or at least some of those volatility trends that come at the wake of summer. The Avalanche president, John Wu, has said that he recognizes asset tokenization as a critical driver for capital markets. So I would expect to see more real-world assets tokenized, and this tokenization trend to kind of pick up speed now that we see large funds putting significant portions of money behind it.
And interestingly enough, the same company mentioned in this story, Securitize. I'm actually editing a story on that right now. Sam's filed it. So they've tokenized a real estate investment trust based out of Spain. That so I guess we've come full circle, right? So Bitcoin came up as an idea for an alternative financial system, because of the crisis. We didn't want to be exposed to, all the degenerate gambling that happens in traditional finance. But now it seems that,
decentralized systems are now lending themselves to legacy financial processes that are seeking a more efficient means of managing, settlement. Like escrow.
And that's where the demand is, right? So you have to give the people what they want. So if the average user now, let's say in the US, you want to buy US Treasuries.
Yeah.
Right. Rather than telling people, no, don't buy those, DeFi yield is better. You say, all right, buy your Treasury, but do it on chain. So you have self-custody and, all these things. Again, we still rely on a centralized custodian, right, to hold these bonds. So
unless you actually like call for them to send you the bond. Yes.
Well,
we're relying on a broker.
I doubt any of the protocols are actually doing that, right? They just probably custody them with one of the big banks, JP
Yeah.
Morgan, or But yeah, it seems that the general idea of bringing everything on chain could potentially work. And this was I forget who said this. I think it was on one of our podcasts. It'll just be, if we have a ton of different blockchains, it'll be the value of the transactions that determine which chain people kind of end up on, right? So maybe you might have like multi-million-dollar transactions continuing on Ethereum and other one. And if you have microtransactions for gaming and stuff, you don't mind if they're on like layer 3 somewhere that isn't as secure. So I guess we're really coming to see the the one size fits all approach isn't really working out, and which is why everyone's kind of embracing the whole app chain, interchain, super chain. I mean, there's all kinds of buzzwords and branding right out there, but essentially all pointing to the same thing.
It's layer 2s all the way down, as a matter of fact.
Yeah. All right, so let's move on to
Bank of Italy.
Polygon news.
Bank of Italy and Polygon are teaming up together. It's an Ethereum scaling initiative. They're launching a pilot program to create a regulated platform aimed at institutional decentralized finance players. Polygon Labs is going to collaborate with Milano Hub. This is Italy's central bank's innovation center. And they're establishing what's an institutional DeFi for security token ecosystem. Now, the initiative aims to leverage decentralized protocols to replicate the existing financial services in a transparent and inclusive manner. It does mark a groundbreaking collaboration between a G7 central bank regulators and banking and fund associations. So this is showcasing the kind of continued interest in blockchain technology's potential, despite some of the recent negative sentiments that have come out as a result of volatility, questions over regulations. Now, this pilot program is just looking to explore various designs for security tokens and establish a regulated environment for security token trading. It comes alongside Italy's efforts to implement a domestic currency regulation, including the introduction of 26% capital gains on tax for crypto profits in the 2023 budget. The Bank of Italy, however, has also pledged to support the growth of regulatory compliant DeFi and crypto activities. So a couple of the projects that they're talking about, having this pilot program involved with are going to be receiving support from the Milano Hub. And they're also going to be featuring seminars, events, bringing in a lot of minds from banking. Fireblocks, DVRs, Italian banks, asset management programs, and financial institutions are also participating in the project. So it's pretty all-inclusive. And Polygon's Matic token has, I think, up. Now, I don't know if it's still up 10%, but I can check real quick. Yeah, it's trading up around 12% over the last 30 days. So it's up a little bit more than 10% over the last 30 days.
Interesting. I mean, these guys, their biz dev is,
stuff of legend,
like,
man.
How do they just strike?
What are they putting in the coffee?
Partnerships, right?
It's crazy.
Okay.
Across
Europe, we've seen like the World Economic Forum kind of like getting ready to look at securities or token-based securities, right? It was, I think, 5 years ago, they were talking about including Bitcoin in special drawing rights, right? So the idea that the central banks in Italy and the central banks across Europe are probably looking at institutionalizing these types of stablecoins for decentralized finance players from, like, again, the legacy finance world looking to iterate into Web3, it makes perfect sense to me. And we see a lot of regulatory efforts here in the United States that are attempting to make some sense of the situation. A lot of the overseas players have already come a little bit further in terms of implementation, working directly with banks with pilot programs and trying to see how are we going to get the ball rolling on these things. So all we're seeing now is a marketplace beginning to open up. I think it's a very bullish initiative.
But why Polygon? What are they doing?
I think it has to do with the cost of transactions. I think that they're running the pilot test on Polygon, and in the past, we've seen pilot tests with these things with permission networks and things like that. Polygon might be a way for them to iterate in a non-permission network to see how it would work, and then perhaps they can find out a way to scale it across Ethereum. Who knows?
Yeah. No, it's just and they pulled Rebecca. I'm not going to get her last name right, but Rebecca Rettig. You know, she used to be on Aave. They've just been making some big hires too. So I think,
yeah,
I don't know. It would be it might be a good story to, you know, get a hold of someone at Polygon, because we always just talk about it internally, but be interesting to, you know, try to unpack what their secret is, because they do seem to just, you know, outperform in terms of partnerships.
Yeah, especially with established corporations. I mean, I don't think anyone else has come close.
Yeah.
In terms of partnerships.
Yeah.
So before we move on to Worldcoin and all the excitement around the token launch this week, we'll have a quick word from our sponsors.
Introducing Ajna, a new DeFi protocol that gives you the freedom to borrow and lend with almost anything in your wallet, from the oldest ERC20s to the newest NFTs. Ajna is designed without oracles and governance, so no need to worry about oracle exploits or governance friction. Ajna massively expands what's possible in DeFi borrowing and lending. Try Ajna today on summer.fi/Ajna.
Right on.
That sounds pretty cool, actually. Lending protocol without governance, no oracles.
Yeah. No, I talked to Dan Elitzer. He had written about Ajna. He might be an investor, full disclosure. But yeah, I'd have to dust off my knowledge about oracle-free protocols and how they pull off lending without an oracle. But definitely, yeah, I mean, at least Dan Elitzer has been pushing that oracle-free trend. I've seen that a bit elsewhere too. So interesting to see how that goes. No doubt.
Yep. So let's move on to Worldcoin. Owen, you dived into the whole the drama, the price action, everything. It was quite.
Yeah. I guess that's this week's big story. We almost got Tiago from the Tools for Humanity team, which is one of the major contributors to Worldcoin, on the stream. We're hoping to have him on next week. I think it seems very likely. So we'll get a chance to ask him. Feel free to send us some questions. But yes, Worldcoin launch. So we saw the SDK go live, open to all developers, which means that Worldcoin's main product, which is the World ID, will be accessible as a tool for developers. So an example of how to use that would be, I think, Auth0, which is an authentication like login thing, which I think integrates, you know, Google email, also has integrated World ID. So it means anyone with the World ID can log in with that. And I'm not sure exactly how that's going to end up looking, but definitely it's this whole idea of an identity you can bring around the internet has fascinated me for a very long time. But Diego's asking a question. I'll answer in a second. Yes. So it's been very fascinating, and it was, you know, and so, you know, now Worldcoin is rolling out. They're ramping up production of their trademark orbs. I saw posters plastered over my neighborhood in San Francisco. So they're really making a big old move. And, you know, everyone has an opinion. Some people are skeptical. You know, we're not even touching on the token yet. And they have been very quiet about the token. So that's the big thing, but, you know, it's crazy. I mean, it's insane. People are, you know, staring into a hardware device. It's scanning supposedly their iris. It's getting stored somewhere. Maybe I think like a hash of their iris is getting stored somewhere to confirm that they are indeed a unique human. So I could talk more about it, but and yes, you know what, Diego, I did indeed scan my eyeball when I wrote my first story about the orb, and
he's part of the collective.
They got me. You know, I don't know. I feel okay, but yeah.
Did you get an airdrop at least out of it?
Nah, I'm USA, man. I can't.
Oh man, that's even worse.
I know. I just sold my soul for nothing. It's okay. It's okay. I mean, it didn't hurt. I'll say that. It didn't hurt. No blood.
Did the orb make any sort of sounds?
It made some lights.
Made some lights.
Yeah. So
Like,
yeah, those are the posters I saw on Judah Street in San Francisco. So yeah, I don't know if you guys have thoughts. I mean, we haven't gotten into the token at all, or if you guys are skeptical, if you guys are going to get orbed. I mean, it's becoming, Diego posted something in our Discord, just like it's becoming a meme, you know, people are joking about like, you know, dating an orb and like, I don't know, you know, so, and then they kind of know it, right? Like, I think Worldcoin is like a tiny bit tongue in cheek, and, you know, but the way things go in this modern world is like things are an ironic joke, but that's like actually a marketing thing and seems to resonate with a lot of people. So
the technology behind it is pretty interesting. They're using
it's amazing.
Zero Auth, which is a WebAuthn based protocol. They're taking decentralized identifiers and meshing them with zero knowledge proofs to, you know, obfuscate the private data of the user and let it integrate with a blockchain based proof. So on its face, it looks really cool. On the other hand, we're talking about getting an airdrop for, you know, putting my data or, you know, with this network, with this organization. And, you know, the connotation of that is like the value of the token is the value of my identity, right? And so if the token goes down, then does that mean that people's identities or value suddenly is uncorrelated to that? Because certainly the value of that data is there. It's intrinsic. It has a value that is perhaps speculated in terms of the token, but if the token ever goes below what that intrinsic value is, it might not make sense. So that's, I think, my personal skepticism about it and interest in seeing how that tokenomics will factor in to this. We also know that there's like somewhat of a large amount of tokens that will be dumped given the nature of the distribution, right? So time will tell.
Yeah, I think it's too early to make a determination. I mean, some aspects of the tokenomics are definitely, you know, raise some red flags. You know, the low float, high market cap game is something that has been played, you know, by SBF and the Solana cartel. So, you know, people have seen that and are a bit wary. Is the project worth 20 billion if, you know, all the tokens were to be unlocked? Who knows? It might be. But I mean, it's too early to say. And we've seen tokens, the way they trade versus reality is a completely, there's no correlation, right? So, yeah.
Yeah. Well, yeah.
I think they're trying to do something potentially good. I think if they had done it without a token, maybe the backlash wouldn't have been as severe. They were like, oh, they were building a public good. But obviously, like, no one's that altruistic, right? Or even SBF wasn't, even though he pretended to be. So,
yeah, I think that's, I think the token does, it does rub people the wrong way. And that I think it's somewhere between 5 and 1% of the token is actually cut out. And I think the community, you know, and even like the vesting schedule is kind of bad. I don't want to spread fake news, but I think investors will have all of their allocations of Worldcoin tokens in the next 3 years. And I think the quote unquote community allocation, we should pull it up, but happens over 20 years. So,
okay.
I believe. I mean, you know, the tokenomics are geofence, so that's also another factor.
Getting some hex vibes from this.
Oh God, I don't know. I mean, but I mean, you know, but it's also like it's a huge amount of effort to be an out and out scam, right? Like there's hardware. There are easier ways, in my opinion, to do it, you know. And I mean, Sam Altman is already, you know, wealthy and busy. So I don't know. I mean, there are a lot of different angles to look at it. And there is like I did interview Alex Blania, who is the co-founder of Worldcoin, along with Sam, maybe that could have been in March. And, you know, there are people who know a ton about AI who do understand that we will, I would argue that we will need some kind of identity solution, and because it's so easy to fake stuff online and will become way easier over the next 5 years, that we will need some kind of identity solution. And, you know, there are people saying ideally you need a decentralized one, or one that's not that is based on a decentralized protocol and not one that's not one that's like run by government or there's too much oversight by any one body. So, I mean, I like the idea, but yeah, the tokens are weird. I don't know if they got pressure. I saw Tarun from Gauntlet talking about Worldcoin a little bit and saying like that he felt like maybe this launch was a little rushed and maybe there's like pressure from investors to get this out there. So anyways, I do support an identity, like a decentralized identity. And I think that is a important thing for the world, I think. So we'll have to see how it goes.
Makes sense. We'll have to wait and see how it all plays out.
Yeah.
Launching in the bear market, definitely a bold move.
Yeah.
Let's see how that goes.
Yeah.
Moving on, we had some very interesting news that could have major implications for DeFi in terms of rates, yield farming, other protocols potentially trying to compete.
Yep. Yeah, I could take that one. So MakerDAO is considering, and I believe they passed on Thursday, an increase of the DAI savings rate, which is basically it's a module where you can deposit your DAI and get a constant rate of return. And they brought that back in December at 1%. They've ratcheted up to 3.19 somewhere. I think it could have been March. And then now they're boosting it up to 8% as part of a one-time growth effort to continue to increase demand for DAI, which has been decreasing in market cap all the way since, I think I had a graph in there, but all the way since I believe Terra, and has accelerated a bit in a downtrend since the Silicon Valley Bank collapse in March. So yeah, I think the financial plumbing, and so the yield is going to come from MakerDAO's vaults, which charge interest on people on the who have the collateralized debt positions. So that's where that's happening. There are some questions of whether it's sustainable, because I think you can right now, you can borrow DAI on, I think, like Spark and other protocols for less than 8% and deposit in the DSR. And
yeah,
so,
it's like 3.5.
Yeah, you capture that
rate.
spread. So that spread is out there, and they know that can't last. So it's a temporary measure. There's some parameters that are going to change. I should pull those up that are going to make it, it's a one-time thing. I think Rune posted that it's like it can only go down. Like you're not gonna ever be able to make it go back up. So they don't think of it as a permanent thing, but I think they're trying to get on people's radars, create some stickiness for DAI, and by using the DSR.
I mean, yeah, that's a great tool. It's being subsidized by the Treasury, which is
really?
I mean, fine as a market. I mean, from maker revenue, right? So that's
Okay.
I mean, if it's whether it comes from interest or from like the real world asset portfolio, whatever it is, meaning it's being subsidized by the protocol. So they're taking it as a marketing cost, I guess.
Right.
Which is different from, let's say, like Anchor offering 20% and just printing the UST out of thin air, right? Which was what was happening. So,
good point, Wawashi.
I mean, they're actually paying the yield out like out of pocket. Like banks do this sometimes, right? When they're desperate for deposits, like you'll get an email from a bank saying we're going to offer you 6% on a 1-year deposit. Why would they do that when your treasury rate is 5%, right? Because they need money for something else, whether it's a loan or some capital requirements come up. So again, will it be sustainable or sticky? Again, is a tough question, because as we've seen, deal farmers are very sensitive folks and aren't loyal at all. They will move from one protocol to the next for 50 basis points.
Yeah,
right. So
Rune wrote that. He talked about I'm pulling it up now, but the cost of many of the users who are attracted this way will likely remain as sticky users due to the enormous cognitive switching costs of DeFi, which is why the EDSR is needed in the first place. I don't know. I read that and I was like, I don't know. Like we've seen capital zoom around I mean, in some ways, yeah, we see capital zoom around. In some ways, people are just like chilling in Aave, getting like a terrible yield, and it seems like they don't care. So, two sides of the coin. But I definitely thought that line was not unilaterally true.
I mean, it's literally
absolutely.
clicking a few times and the capital moves. There's no cognitive
Yeah,
process.
the whole point is that you can zoom around pretty quick.
Yeah.
So yeah.
So I did notice on the Maker forum that someone someone who responded to the proposal said, why not reward like locked depositors, right? Kind of that might make more sense than a temporary boost. And as soon as so what's the idea here? They want to drive utilization, right? So so a bunch of people deposit, die, the rate goes down, and they leave, and the rate doesn't go back up. So no,
at the end
of the day, the protocol comes back to where it was. Whereas if you say, okay, if you lock your DAI for a year, you get 8%.
Yeah.
That would make, I think, personally, that would make more sense to me, because then you're saying, okay, even if they don't want to be sticky, you're forcing them to be sticky. Right? So
incentivizing.
Come on, this is like Ponzi 101 from 2021. Right, like staking is good. Stake, lock your coins,
lock them up. Lock them up.
Rewards, staking rewards.
But joking aside, that does seem like a good idea. I mean, why not? Yeah, make people give up a little more. It feels like more of a fair trade than like literally just giving them this temporary arbitrage opportunity. So
and I'm sure if it hasn't closed already, I mean, as soon as it goes live, there'll be a few whales that go and capture it in the first block, and it'll be done.
And Max,
smart contract to do that right now as we speak.
We'll see. So but interesting financial plumbing news for sure.
I think more than the bump itself, it's going to kind of have a ripple effect throughout DeFi yields, because let's say you have a couple of billion that moves into DAI, right? So that'll kind of play with the utilization levels of the other stable coins, so those yields would move. And
because and also like if demand to borrow DAI will go up, I mean the spread will shrink. No, I mean
it should.
Maybe not converge, but
again, they do have the direct deposit module and stuff to stabilize rates, right, when demand goes up. So again, does that mean if people just start borrowing DAI on Aave, for example, does the D3M just keep printing in liquidity like the Fed does? Or I'm not too sure of how the system works exactly after all the tweaks and new stuff that's been added. So but if under regular conditions, you'd expect that spread to narrow as people take advantage of that arbitrage. So
indeed.
All right, so a couple of the other DeFi specific stories that we had this week. One, of course, was Koenig Finance that was hit by 2 attacks by the same attacker. One was a re-entrancy attack and a modified sandwich attack as well. So Koenig is kind of not like Convex, but it's built on top. It's another protocol built on top of Curve. And the idea was that, Curve now has so many pools, right, on their on the protocol, where you have so many options to earn yield on ETH, stablecoins, Bitcoin, whatever, because you have so many synthetic and staked versions of ETH. Right. You have staked ETH, RETH, and all kinds of other ones, all of which offer different yields. Some are higher, some are lower. So Koenig Finance said, all right, let's kind of make it easy for the user. So they created what they called omni pools to spread deposits across all these Curve pools. So let's say you wanted yield on your ETH. So you deposit your ETH into their ETH omni pool, and it would kind of spread the deposits across all the various liquidity pools that contained ETH, right? So you'd have a blended, diversified mix of all possible yield ops, right, without needing to actually deposit and move from one to the other. But of course, with novel code comes novel risks as well, right? And we saw that in this case, unfortunately. So it was about 4 million that was exploited from the protocol, and as expected, users fled as soon as it happened, right?
Yeah.
Once code is exploited, even if the team says, "Oh, the other vaults are okay," you're not going to stick around. I think by now we all know better. Like at the first sign of trouble, just yank your liquidity and then think about it again later if you need to deposit again.
Yeah.
So TVL is down from 160 mil to about 40 or less by now, probably. A token crashed as well, yeah, as you'd expect.
Yeah.
So yeah, the team's looking into it. This is a protocol that was audited, I believe, and but again, with the new kind of novel code, it's always difficult, right, to catch, even for auditors to catch all the possible attack vectors. And the thing is, when new protocols like this thing launched in March and picked up more than 100 million in TVL, that makes it such an attractive honeypot for an attacker, right? You can spend your whole day, 24 hours a day, just trying to break this one contract because when if you do it, you're set for life, right?
Yeah.
Even if you get 10% of the TVL or you're able to steal whatever. I think, yeah, this guy got 4 million. Don't know where he is in the world, but in a lot of places, I mean, he could just do nothing for the rest of his life and his descendants would be set too. So
depending on where he's living, yeah.
So I mean, the incentives is there, right? So
Yeah.
as the DeFi community, I guess the best we can do is keep pushing forward for more audits, more eyes on the code.
It's really hard because I mean, there's this whole idea of moving. I mean, there's these incentives of moving fast, but then well, yeah. I mean, there's that whole I mean, people are saying, I saw, I think it was Jesse Walden of Variant tweeting this week saying, this DeFi is not actually a space to move fast and break things, but it's if you figure something out, it's you kind of do need to move. I mean, competition, you need to move quickly. And so I do think, I mean, I've never developed a DeFi project myself, but I think that trade-off of speed and security is.
So I think guarded launches are a great idea. Yeah. So not many protocols use them because they want the TVL numbers, right? To make headlines on Twitter or so we cover it, for example.
Right.
But I think guarded launches where, you go live, you say, okay, the vault's capped at 5 mil, 10 mil. Mm-hmm. That's it. Or even less if you're not 100% convinced of the code. Let it run for 3-6 months.
Yeah.
Right. And keep kind of going over it, having more audits, etc., etc. And
that's
then
what Eigenlayer's doing.
Really confident, you can kind of take those caps off. And I wish more protocols.
Yeah. Is that what Eigenlayer's doing? Is that why they're taking a while and they keep
I believe
capping?
So, yeah.
It's about security.
So, yeah.
Good for them.
And I think they're also, I mean, the actual restaking itself isn't, or rather being able to validate other services isn't live yet, right?
Yeah.
So what's the point in collecting a massive chunk of ETH in a potentially exploitable contract, right? Before it's even doing anything.
Yeah. Yeah, they seem to be they seem to be very, very professional about what they're doing.
Yeah. So. I mean, I think that would potentially save a lot of protocols from exploits like this, or at least minimize the damage when they do happen. I mean, because they will happen, right? At the end of the day, no developer is infallible, right? I don't think we've seen any kind of super coder who's able to program bulletproof stuff. So maybe AI.
Yeah, we'll see. Yeah, I know. I know people are working. Yeah, I think I interviewed some guys. They were working on AI tools. I mean, I don't know the details, but I can see how obviously being able to run tests for exploits, I could see AI being super helpful. So,
certainly.
Yeah.
And finally, we had Pancake Swap, which is, I mean, for everyone who was around for DeFi summer and BNB chain boom of 2020, 2021. Pancake Swap is basically the Uniswap of that chain, right? And since I guess since the bear market took hold, their strategy has been to kind of get closer to the Ethereum ecosystem. So they've been deploying on all the major layer twos, I believe, or at least a few of them. Which ones do they have now? Yeah, so they're on Polygon ZK EVM, Consensus is Linea, and now ZK Sync Era, which is ZK Sync, I think, is now basically the hot chain of the moment, just because people are chasing the airdrop. It kind of reminds me of Arbitrum pre-airdrop, right?
Yeah.
So it's actually taken the top spot in terms of transaction count, with nearly 26 million transactions in the last month.
Wow.
Now, again, how much of this activity will sustain post token launch, or I think, of course, we'll have to wait and see. Arbitrum is actually doing quite well, still doing 20 million transactions. Of all the, I've said this before, but of all the existing or running mainnet layer twos, Arbitrum by far has the best user experience. Like personally, I find it great in terms of like fast finality, no waiting around, very few failed transactions, if any. And yeah, they're doing a good job.
But we did see that Optimism passed Arbitrum briefly, I think, in TPS this week.
Yes.
I was talking with Diego a little bit about that, and we're not sure how how the super chain transactions get called in that. But I mean, at least L2Beat separates out Coinbase's base solution, so I don't think it's coming from people building with the Optimism stack. So, but yeah, interesting to see Optimism transactions move up. I mean, it's almost at parity with Ethereum right now. So they're at like 10 transactions per second. They're almost 11. Ethereum's at like 11.5. So
we should look into which apps are driving that action.
Yeah, it's up 50% in the last 7 days. So yeah, we should.
Yep, so I think that pretty much covers the major news of the week. And do you guys have anything else you'd like to share? Or I don't think we got any other questions in chat, right? So
I'm just looking forward to covering a lot of exciting stuff next week. And I've got a kind of interesting story. One of the quietly kind of moving up projects in the animation domination, if I can turn a phrase there with Fox, Cropopolis. You can look for a report on that coming very soon from me.
Right on. Who's behind that? There's like a...
Rick and Morty co-creator Dan Harmon is working together with producers at Fox to bring this NFT project-based animated series to the airwaves this September. And it has some interesting features that allow the fan base to get involved directly with what's going on in the show, as well as take advantage of some merchandising opportunities. We want to be looking at that, taking a little deep dive into that platform and what they're doing there.
Right on.
Nice. Looking forward to seeing that. Great. So thanks everybody for joining us on our weekly recap. We'll be back same time next week, 2 p.m. Eastern. Have a great weekend, everyone. And
all right, John. 12 p.m. 12 p.m.
12 p.m. 2 p.m.
Yeah. Right?
Oh yeah.
Yeah. All right.
Same bat time, same bat channel.
All right.
See ya.